Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack, today is June 19th, and today's episode is going to cover news of the SEC dropping its case against Consensys. We're going to be talking about Rocket Pool growing on base. We're going to be talking about some juicy Giga bread that, Giga juicy bread, I guess, that's what Jasper called it, being teased in the community. We're also going to be talking about some Ethereum ETF news and a whole bunch of other Ethereum stuff because there was no Daily Go episode today. So let's get started.
10, 9, ignition sequence start, 6.
And the biggest news by far today was that Consensys had their suit. Well, yeah, the SEC were trying to come after Consensys for dealing with securities and stuff like that, and they have dropped their suit. So this is the official statement coming out of Consensys. They think Ethereum survives the SEC. Today we're happy to announce a major win for Ethereum developers, technology providers, and industry participants. The enforcement division of the SEC has notified us that it's closing its investigation into Ethereum 2.0. This means that SEC will not bring charges alleging that sales of ETH are securities transactions. The decision allows for a letter we sent on June 6th, blah, blah, blah. This is our fight continues. In our lawsuit, we seek a declaration that offering user interface software, MetaMask swaps, and staking does not violate securities laws. It should not take a lawsuit to provide the much needed regulatory clarity to allow an industry that serves as the backbone of countless new technologies and innovations to thrive. But here we are, ETH for all, and they got a full statement as well. So this was actually like really huge news. It was something that was like overhang on the community. Like most of us knew that the fact that the ETFs had been approved meant that, you know, ETH status as a security was a non-starter. Of course, it'd been approved as a commodity, but the fact that this case against the Consensys has been dropped, I think will finally put to rest any argument now about ETH, the asset being a security or a commodity, and is absolutely firmly 100% a commodity. There's still some questions here, like, you know, the suit against Coinbase is still going, the action against Uniswap is still there. There's even aspects of the Consensys case here, but it seems like Consensys are really bullish. They're in a strong position right now. So congratulations to them. Laura Shin here wrote an article about it, saying that in the moments after the news coming out, an Ethereum whale acquired over $19 million of ETH, and basically, like, it brought some confidence into the markets. So there was a pump. It wasn't a huge pump. It definitely wasn't as much as I thought it would be. You know, with this officially like kind of going away, this regulatory FUD that's been there for quite a long time. There was a bit of a pump. RPL pumped, Lido's LDO pumped, like a whole bunch of tokens pumped based on this news. But it wasn't to the extent that I thought it would be, in all honesty. Here Arthur says, great outcome for Ethereum despite the small rally. I think the market still haven't priced in the fact that ETH and BTC are the only two crypto assets that have no uncertainty over its regulatory status and can attract DeFi demand. And this is the kind of thing, like Arthur's saying here, is just, it makes sense that, you know, now we know about ETH and Bitcoin, and these assets can now work in a way that others can't. And it's only a matter of time before the price of ETH starts reflecting these changes on the regulatory front and the TradFi integration front. And then finally, on this Consensys news, here JC says, people don't realize how impactful this decision is for Ethereum. It increases regulatory clarity just before the launch of ETH ETFs. I believe it's also a signal that the SEC doesn't want to fight the Ethereum ecosystem anymore. This cycle will crown Ethereum king. So the next steps that we want to see is them dropping actions against Uniswap. That would be huge for Ethereum. And then, of course, you know, on top of that, their action against Coinbase, if that gets taken back as well, I think there'll be some really, really big things coming up for Ethereum after this. Okay, moving on to the Rocket Pool community news now. So here we have a tweet from Flat Money. So those of you who know Flat Money, they are offering a Flat Money stablecoin on Base. So it says, today we're kicking off Summer of Rocket Pool on Base, a campaign to build community of Rocket Pool users and rETH holders. Learn more about Rocket Pool and rETH community on Base. So I've talked about Flat Money a bunch of times. They actually had one of the better yields on Base for rETH, but now they've got like this little marketing thread about Rocket Pool, about RPL. They said if you hold ETH on Base, you can earn 2.82% APR just by swapping it and holding it in the rETH in your wallet. While there are other liquid staking tokens available, Rocket Pool is the most decentralized liquid staking protocol on Ethereum. And then they said, why is this important? And then they asked, they have a screenshot from the website that the security of Ethereum network relies on many people across the world participating as validated node operators. Node operators use hardware and software, blah, blah, blah. You all know this kind of stuff. Then they just talk about like the different rewards that you get for Rocket Pool as well, and just kind of introducing Rocket Pool to their audience. After that, they say the Rocket Pool community is working to onboard more node operators and provide greater value to rETH holders on layer 2s. Since rETH liquidity has improved on Base, through our work with Rocket Pool's Incentive Management Committee earlier this year, we decided to work with the Grants Management Committee to highlight the benefits of holding rETH and using your rETH in various DeFi protocols on Base. Now rETH integrations have emerged in the last several months, so there are many places to earn with your rETH in the Base ecosystem. Next week, we'll start highlighting DeFi protocols on Base where you can use rETH. Tomorrow, we'll share more information about rETH liquidity on Base and how to bridge rETH between Base and Ethereum. So if you can't wait until then to learn about it, you can join the Rocket Pool Discord. This is actually a nice little thread that they've got, just kind of introducing Base to their audience. Introducing rETH to their audience on Base. They've got about 1,500 followers on Twitter, so it's not a small audience. And this post got 54 likes and 18 retweets, and I think most of those from people within the Rocket Pool community itself. But I'm excited to see the information that they bring up over the next few days, and really kind of dig deeper into that and what they're offering. Okay, so yesterday's episode of Rocket Fuel was kind of absurd. There was just so many amazing bullish things that were kind of going on. And whether that was talking about the Ethereum ETFs, whether that was talking about the price impact of the ETFs on Ethereum, whether that was talking about Rocket Pool scaling and growing and all these amazing ideas that the protocol that have been developed in the protocol, and even to the RPL price action and what that's kind of looking like, and how bullish it is when compared to other ETH beta token unlocks and stuff like that. Well, that was a very special episode, like an hour and 25-minute bullish rant basically. But Jasper and I got talking, and we actually started having some ideas about some really cool things. And Jasper kind of teased it to the community here, saying me and Wack are working on something mega juicy, giga juicy, one might say. Long shot though. So Blue AVM, the first thing said, when's it coming out? And he said, who knows? And there's this idea, let me actually go back to the original message. So I said, I replied a little while later saying, seriously guys, if this happens and works out, it's going to be the greatest moment in Rocket Pool history. And then I got a thinking emoji by Sneaky Ninja Guy. And then I said, that's maybe just my drug, a little brain talking. But no, what we were talking about was, there's some ideas that we have of getting information about Rocket Pool out to the world. And there's some really, really exciting things that we have to talk about. And sadly, at the moment, it looks like it's a little bit on hold. But Sneaky Ninja Guy says, when does this Giga Juicy Bread finish proofing? And I said, well, Jasper replied by saying gets put into bake tomorrow. But it looks like it might take a little bit of time. So, from some of the things that we've heard already, it might be a little while, but I'm actually being inspired by Emmanuel Awasika on Twitter, with his make Ethereum great again, get all the marketing out there. I think Jasper and I want to try to leverage some of our social capital into getting word about Rocket Pool out there. So that's something that we really want to do. And I think that's going to be really exciting if things work out the way that we hope they do. Okay, next we have this ETH Finance post from Long for Wisdom. And Long for Wisdom, for those of you who don't know, is a a person who's been really working at like managing the PDAO and like all the different things that have been going on, like kind of just taking that role upon themselves and doing some really great contributions to like the GMC work, IMC work, I guess, and a lot of like governance stuff and PDAO governance stuff, especially. One of the main things that they're working on is tokenomics work right now. And here they put out a post on ETH Finance saying we've been helping to coordinate work on Rocket Pool's community-driven tokenomics rework. Hopefully you've heard about it by now. I know it's come up in here several times. Specifically, I'm looking for feedback from outside the bubble to take back to the major contributors. This is a chance to complain in a way that might have some positive impact. This is an important disclaimer. None of this has been voted on by RPL holders yet. So then LFW gives a little bit of a summary of some of the major changes that will be coming likely in the tokenomics change. And that includes ETH-only validators, RPL rewards going away because RPL inflation goes down from 5% to 1.5%. There'll be no more RPL staking cliff to receive rewards. You'll be able to, receive rewards in proportion with even like 1 RPL if you have it staked. And then the node operators will get commission from rETH holders. People who stake RPL will get commission from rETH holders, and then there'll be a surplus chunk, and we're still trying to figure out what to do with that. So here there's some things that will be coming along, mega pools and smaller ETH bonds, and then LFW kind of links people to the different topics where they can read more about it. So far there hasn't been any people responding to these ideas yet, but hopefully some people will come and bring their ideas, which would be really amazing. I give it a boost on Twitter. So I said, do you think Rocket Pool needs to change? Well, we're changing. Give us your feedback on the ideas the community has come up with. We'll listen, I promise. You can reply below to this tweet or head over to rETH Finance for a more detailed reply. And then it's just a screenshot of Long for Wisdom's post. So I know that you guys who are listening to this are, of course, inside the Rocket Pool community, but some of you Daily Gwei viewers, if you're listening to this and if you want to provide feedback, you can follow the links below, and we'd love to hear your ideas, suggestions. Now's the time to get all your ideas out there, so we can work on it. Okay, a really interesting conversation came up in the friends channel on the Rocket Pool Discord, on the Rocket Pool server here, and this was kind of Val shared this screenshot of p2p.org and their DVT clusters that they're using with SSV, and it says they seem to limit validators at 500 per entry, so nothing to worry about. Lol, I think it's like 30,000 under P2P. They have 80 plus IDs, lots with 500, some empty, some in between. So Jasper replies by saying, whoa, you're telling me that DVT fails under Sybil attacks? And he says, it's not even an attack yet, it's just SOP. And then Jasper replies by saying a Sybil operating procedure. The idea is basically that your validator will have X number of keys, and those keys are divided out amongst like a disparate number of people. And the what can happen is if the same person has too many of the keys of that validator, they can kind of take over that validator. It's like Sybil attacking DVT clusters. Now this is something that's been come up a lot when people talk about SSV or OBOL or Diva and how they're planning on doing this. Well, here Kotler from Diva replied by saying that's interesting to the screenshot, and then Val shares links for the SEC network and says have a look around. It's pretty silly, and the p2p.org is by far from the only repeat folks. All nodes have a bunch too, peer 2 have a bunch. So the idea is that the more people have multiple keys, the more likely it is that they can collude with themselves, basically. And then there's this kind of discussion kind of came up, and Val here was saying that crypto manufacturer, that's Yorick, has a single 500, and he says beyond reproach as ever, Yorick. And Yorick replies by saying we have a few more, 2 public, 1 private, 4 node cluster, Stader. Don't ask me, it seems odd to do DVT amongst just one entity, but that's what they wanted. And then 1 private Lido and 2 private CES. So their crypto manufacturer actually running a whole bunch. And then Val says that'll show me to load you. Oh well, I'll praise the transparency then. And then Kotler replies by saying, this can't happen in our case, meaning Diva and Nektar. And Pateris takes a screenshot saying this can't happen in our case, and he says, let's see if this comes back to bite you, which is really interesting. And then Noshua says, do you believe that Diva has solved the Syl problem? And that is where the discussion kind of got juicy. And then there was a reply from Pateris, and he says, I don't expect any secret source. Sybil and the trustless network can only be mitigated, not completely prevented. Now, the Invis said, like, what if they're not going trustless? That was a copy pasta, but it says they're going to have 5 nodes per validator, not 16. And that's the information that's coming out. And Kotler says, key shares are assigned randomly. You only have 1 max per validator, so there's no chance to control a validator unless you have multiple nodes. And planets align, and you get 3 out of 5 validator shares for the same validator. And then it says, so hopefully that doesn't bite me. If it does, it's a 1 in a million situation, which wouldn't bother me. And Val replies by saying, and this is realistic, I think he says, what if I just flood with shares and I have like 70% of the available shares, and then can exit cases where I'm not the majority? So basically what would happen is, like, you sign up with a whole different bunch of node keys basically, and you see which ones that you get and which ones you don't get, and then the ones that you get the majority of, you keep those. The ones that you don't have the majority, you just exit them and try again until you get more majority cases. And then Kotler says, unless you're running a lot of nodes, and it says, Val says, there's essentially 0 overhead to do this. You don't need separate clients, just free addresses. So Prada then, who also is with the Diva Nektar team, says, key shares are assigned per operator, not per node. You can have many nodes, an infinite number of nodes, but it won't affect your chance of getting more key shares. And then the operator is just an address. Is there something preventing me from making infinity? And then collateral, it says, Justin Sun can flood the market and have his collateral go further by dominating clusters. Do you have an upfront higher collateral and then a lower per validator? That would have an anti-Sybil effect. And then that was kind of like the discussion that came up. But there's a whole lot going on over here about how these networks can be attacked. And like, this just isn't a Diva problem, it's actually a problem for all of crypto. And like, we're seeing this with airdrops, we're seeing this with other things where Sybil attacks are a real thing. And sadly, it's really hard to mitigate them, like if not impossible, if you're trying to maintain decentralization. Now, we got some news from Joe yesterday about the node set Hyperdrive version 1, and he gave us a little bit of information that the commits are ready on GitHub and that it's going to be live very soon. So in yesterday's episode, we talked about how it's going to be here in a couple of days. It looks like it might be here today or tomorrow. So if that's something that you're paying attention to, you got a little bit of leaked information there from Joe. So thanks, Joe. Okay, moving on to some Ethereum news now. We've got some really exciting stuff here, like truly exciting stuff. So here we have Nate Garassi saying 2 sources told Tim Copeland there's a Friday deadline to get these in. So these being the S1 revisions, which, it seems like the SEC has been kind of working with these 1-week turnarounds. So the ETF was approved, with the 19B4 forms. And then after that, the applicants had 1 week to get their S1s in. Then the SEC sent them back within the week, and now the SEC wants the revisions back within the week. So here, a source at one issuer said the latest round of comments were reasonable, and they're looking forward to approval soon. And then similar to what Eric Balchunas was saying, and here there's a couple of little quotes as well about how the comments are light. And he says, I suspect you'll see people file pretty quickly this week, and then we'll see how many more turns of the wheel are required, the second source said. So the idea is, like, basically they'll put in the amendments this week, and then the SEC will either say no, make further amendments, or they'll accept them. Now, the way things are being described as being light, and the fact that the Bloomberg boys have moved their target forward, to July 2nd, that shows there's a possibility that they'll be approved by next Friday, which means that trading could start happening the Monday after that, which is amazing, which is where their date comes from. Then here we've got James Seyfarth saying that the first filing of the amended S1 is in from Bitwise Invest, and they're giving some information here about what they're doing, but their fees are not disclosed yet. And then there's some really interesting information here as well. He says there's no way to know when these things will launch based on this filing. It might not require any additional updates, might require tweaks, but they need final SEC approval. Launch timing should be mostly up to the SEC. This is Eric Balkunas, and I think it should launch before July 4th, which is just what we were saying just a second ago. But this is the really interesting piece of information here. So it says it looks like Pantera will be putting up to $100 million into Bitwise Invest's Ethereum ETF. Pantera is an investor in Bitwise, I think, and had similar language, but for 200 million in Bitcoin. And says Pantera didn't file a 13F, saying they still own Bitcoin though, of like the Bitwise's Bitcoin ETF. And then here it says they indicated an interest in purchasing an aggregate of up to $100 million of shares in this offering from authorized participants. And what's really interesting here is that, we talked in yesterday's episode about Hexdash, I think it was, who are doing the Bitcoin ETF application joint, and they're going in at 70%, 30% according to market weight. Well, according to this buying from Pantera, it will end up being 66% Bitcoin and 33% ETH. And these numbers are like way higher than the flows that people were expecting a few weeks ago. And the fact that people are coming out now and saying these numbers is actually incredibly exciting, because ETH, of course, is a smaller market cap product, but going in at 50% the size of their Bitcoin, or 33% of their total portfolio, is actually way more bullish than people were giving credit for. And I think, if you listen to a couple of the Bankless episodes this week have been amazing. Yesterday was with the person from VanEck. Today it was like Ethereum's representative on Wall Street, like the guy self-proclaimed. I forgot his name, but he was saying they were both saying really interesting things about like how investors are going to be looking at like Sharpe ratios and things like this. And it's going to happen very quickly that as Ethereum increases in market cap against Bitcoin, they'll start to overposition in Ethereum. How we'll start seeing people who bought into the funds sell out of Bitcoin and buy into Ethereum. So that, of course, will be sell pressure on Bitcoin, buy pressure on Ethereum. There's some really interesting dynamics here at play, and like it's incredibly bullish. So you should definitely go watch today's Bankless episode with that guy. Here then Nate as well says that the lack of staking won't impact demand for ETFs. So here, this is from the co-founder of 21 Shares saying that there's this idea that this kind of like what I was saying yesterday is like people aren't going to care about 3% yield when you've got an asset that can appreciate 300%, and you want to get in the asset as early as possible instead of having this idea that you'll get in once the yield is available and miss out on that 300% gain. Like, it just doesn't make sense. It's really not smart way of thinking at all. And I think that these guys who are investing millions, billions of dollars, they understand like how returns are way more important than yield in that sense. Ethereum, Ether, and BTC from Bitcoin, these are massively growing products. Like, you don't care about those 2 or 3% that you might be able to get. So here, they're talking about how it says one of the things that people forget is that staked assets have an impact on liquidity. So if Ether's unstaking period balloons to 22 days, which does happen, how do you deal with that? So they're already kind of thinking about the exit queue and seeing how that works. It says it could, for example, there could be months where the unstaking period is 6 or 9 days, and that range can be so wide it changes the liquidity requirements. And they'll go on to say that, it doesn't just jump from 9 to 22 days, it actually slowly extends. And if you monitor these things, they're data inputs they can use to manage the portfolio, that you're doing the right things in terms of maximizing returns while minimizing the probability of liquidity issue. Yeah, so this just goes to show that there's a lot of deep thought going into this, and these people are a lot smarter than I think some crypto natives might give them credit for it. And then, so this again, the Pantera news. So moving on from ETF stuff, here we had Layer 0 Foundation airdropping their token, and this is the eligibility checker that came out today. Now, I think there's like 1 million addresses or 1.3 million addresses that are eligible for this, and you can put your address into the checker to see what you get. I think a whole bunch of people are getting like really, really small amounts that's going to amount to like just a couple of dollars, like, not even worth claiming. But some other people are getting pretty decent amounts. It looks like the token will go for about $4 to $5 on trading when it goes live, I think on tomorrow. So that's something to keep in mind. If you are trying to claim this, be aware of that. But people are really starting to say like this is going to be one of the last big airdrops. Of course, the Eigenlayer one will become liquid in September, but last big airdrops that people have been farming, because the people are kind of turning off from the airdrop meta. I don't know if I fully agree with that. I think like it's so easy to farm some of these protocols, like, you just deposit your ETH in there and just wait, that people will just keep doing that. But the reality is that I think there's more and more of a backlash now against some of these airdrops. So it's going to be really interesting to see what protocols start doing about that. Okay, we've got an update from CowSwap here, and CowSwap are saying that timing trades with multisig is hard, but Milkman changes that. It says Milkman lets you use a price checker to get a fair execution price, even when your trade is far in the future. So Milkmap is Milkman in an easy to use safe app. So this actually is really great for DAOs and other groups who need to execute transactions using multisigs. And I shared this with the IMC and the GMC, because we of course do all our transactions through safes, and this is actually like going to be a really nice tool to make things easier for DAOs and safes to work. So if you are a CowSwap user, like, they are doing some really, really cool things. And also they have this grant system where it says Milkman was made possible by the CowSwap Cow Grants program. So if you want to build on top of CowSwap, then get involved with their grants program, and you might be able to make some good money while you're developing cool dApps. Okay, and finally we're going to end with me answering some of Blue AVM's questions. So I kind of blew him off yesterday. Sorry about that. But so high level intro of megapools. The high level. He said, let's talk about the high level intro of megapools, max EB, token changes, ETH only mini pools, and other enhancements. So with megapools, okay. So right now, when you have a validator with Rocket Pool, every one of your validators has separate contract. With megapools, what will happen is all of your validators will come into one contract. So if you have, like, say, for example, 10 validators, now if you want to claim your rewards, you're paying gas 10 times across those 10 validators. However, with megapools, if you want to claim your rewards, you'll just be paying gas once. And it's the same kind of idea about spinning up validators. There'll be huge gas savings in starting validators, claiming rewards, all of that kind of stuff. So this is a really great, like, quality of life improvement for node operators. Another great thing that megapools allow is because now you'll have like node level collateral instead of just validator level collateral. You can actually start using sublinear bonding. Now, what does that mean? It means like currently in Rocket Pool, you need 8 ETH to protect it against MEV theft, 8 ETH of ETH collateral. With megapools, what will happen is once you hit that 8 ETH of collateral, any one of your validators can get the collateral from the other validators that you have, because they're all in one contract. So what you'll be able to do is, your validator number 2, number 3, number 4, they won't need that 8 ETH of collateral. They can use much smaller amounts, and that can be down to like, 1 ETH for slashing and a little bit more on top. That's where this idea of 1.5 ETH validators, LEB 1.5s comes from, is that with megapools, your first two will be 4 plus 4, and then after that you can have 1.5 for as long as you want, because you'll have enough collateral that's happening through megapools. Now, max EB is something that's kind of similar, but a little bit different, and I think it will be easier for the Rocket Pool team to implement max EB than it will be for megapools, because megapools will have to be made from scratch. Max EB is something that's happening at the Ethereum level. So what's max EB? Like right now, your validator is set as 32 ETH. Anything above 32 ETH and you don't accrue extra rewards. Anything above 32 ETH, sorry, anything below 32 ETH and you're not getting rewards, like you're getting punished for that. Now, what will happen with max EB is the lower bound will still be 32 ETH, but the upper bound is going to go all the way up to 2048. Although I did see some people mentioning 1024, but I'm not sure about that. But 2048 is the number that I saw before. So one of the great things that will happen here is that you'll be able to have compounding of your ETH rewards, and there'll be fewer validators on the network. even though there'll be just as much ETH securing, the Ethereum network. And the benefit, of course, that will be that it'll reduce chatter and gossip on the network, and it'll make things like having more blobs a little bit more easy. Right, with the token changes, I guess Blue AVM's asking about the changes that'll be happening to RPL. And the biggest change to RPL will be that RPL will no longer be used as a collateral asset for your validator, so it won't be necessary to have RPL anymore. But if you do have RPL, you'll be getting rewards in ETH terms from ETH stakers on Rocket Pool. From our ETH holders, they'll be giving a share of the commission to people who stake RPL. There's another share of rewards that potentially could go to buying back and burning the token. So those are some of the token changes that are happening. And then with ETH only mini pools, this is one of the options that people will have now. We've realized that there's a whole lot of people who want to stake with Rocket Pool, but they don't want any exposure to RPL. Well, the great thing is that they'll be able to now start ETH only validators. And what's really funny is if there are a lot of ETH only validators, then the people who stake RPL will actually be getting outsized returns. So that's the first level of answers. I'll come back tomorrow to give you more answers. So on that note, I'm going to end today's episode. So thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you all have a lovely day ahead, and you celebrate Juneteenth. I hope you have a great day, and I will see you all tomorrow. Bye.